should be the right asset allocation in this market right now?
So I think keep it simple, allocating across index funds a little bit, across mid, small, large, all of them, because there's no very clear view on what will do better. But mid cap overall has been having better earnings growth, whether it's last year, expected next year, a little more sort of moving together. Small caps is obviously very, very large universe and very scattered in terms of stock selection. So I would, sort of allocate equally, but slightly more to mid cap. So let's say 30 large, 40 mid, 30 small, something like that, I think is good from an equity allocation perspective. Sectoral rotation is something people can do, but again, not easy for individuals to do. But if there are advisors or simple models someone is using, then you can probably use sectoral index funds or ETFs as well.
Very clear. But give us across asset classes, what's looking best from a risk-reward standpoint? Is debt looking better? We've had no strong inflows in debt for a while now, right? I mean, it's one of those ignored kind of asset classes, but the returns don't seem to be enthusing the street either. So how should one look at it across asset classes, gold, silver, debt, and the like?
So interestingly, we are all talking about equity markets being tough last 2 years. But if you look at fixed income, as you said, that also has been very patchy last 2 years and very difficult. So that's the reason why, the interest has not been there. And of course, the larger taxation issue still remains. And, every budget we think that maybe, something will come in for the fixed income taxation. But obviously, it has not till now. So that is the dampener. And actually, the SIFs I was talking about, the excitement is because of that as well, right? But yeah, going back to the asset allocation, I think I mentioned I started with equities and the market cap allocations.
Yes.
Because from here till December, I would be a little bullish on equities.
Okay.
We've had a tough 6 months overall, but a lot of factors recently on the margin changing. We talked about earnings, geopolitics, crude, but also if you look at FI flows, which everyone has been worried about, talking about it. And this is something I mentioned many times in many forums earlier, that I never worry too much about the FI flows, because in the last 10 years, before that it used to be a lead indicator, but in the last 10 years, they have become like momentum players, right? So you see 3 months, 6 month positive, and flows will start becoming positive. And that's what you've started actually seeing in the last few weeks. But because it is the most under-owned by FPIs, in the entire history almost. So I think that has a tailwind. If that keeps continuing, that can be a large flow that comes in. Domestic flows remain strong. Earnings, as we discussed, has been slightly better. So if on the margin also it is stable to better, I think, the next 6 months can be pretty good. And, rallying 8-10% will not be a big deal if some of these factors remain steady or improve further. So from that perspective, from an annualized return perspective, it becomes very interesting. Silver and gold, of course, given the rally in the last 2 years, is always a favorite topic. In the long run, I would be quite bullish. But in the near term, I think it is going to be very volatile and very difficult to sort of time and take advantage. So the only thing is, from a long-term perspective, if that positive or bullish view is there, then you can obviously take advantage of the volatility to